Hello, I'm Yisha Chang, licensed realtor in Ottawa. Today I'm going to talk about why you should not be spending your money on rent. The goal of this video is to point you to the direction of the right thinking. It's not a single math that applies to everyone. So let's start with an example for the fixed expense part, where you can see how your rent looks like when it's a mortgage instead. So average rent for a decent 1-bed or 2-bed unit in a desirable neighborhood in Ottawa would rent between $1,600 to $2,000 a month, and oftentimes plus the utilities. So let's use $1,800 rent on a 2-bed unit for the purpose of comparative calculation. If someone is getting an interest rate of 2.14%, $1,800 is equivalent to paying off a $420K of a mortgage. And depends on what's your down payment. You are actually looking at living in your own home. Let's also not forget about the equity you will gain in terms of the principal you will be paying off and increase in the home value in the long run. Real estate market has historically been uptrending. You can expect a modest 2 to 5% increase in house price every year, and even higher if you're looking at the past 3 years. Over a period of 5 years, here is the difference of the money you will be gaining versus renting. Of course, every one of you would need a more personalized calculation. Now let's talk about a few concerns most of the buyers would have. First of all, I have heard people saying they would like to save more towards 20% down payment to avoid mortgage insurance. Let's do a math again. Mortgage insurance for a $400,000 property at 5% down payment will be approximately $15,000 added to your mortgage. But your rent in a year is about $21,000. Another thing some of you may ask is that what about the hidden costs of owning a home or unrecoverable costs? One of the common mistakes I know is to seek a rule of thumb costs or percentage such as 5% of your home value to do the math. Can you actually do that for this type of cost? What about when you purchase a 5-year-old home? What kind of expenses you are actually expecting? Or if you purchase the home $20,000 below market value, which can become an earning when you sell your home. Plus, not all costs are unrecoverable. Some upgrades may increase your home value when you sell or refinance. Think about it. Have you ever heard someone after owning a home for a number of years saying, owning a home doesn't make sense to me financially. I'm going back to renting. Alright, if you want to plan for your first home purchase and save upon your rent, let's chat about what's your true borrowing power. I have access to numerous lenders to explore a variety of rates and options tailored to your needs. And most importantly, being a licensed realtor, I can help you to find the right home.